have to do the full analysis. So what are the cash flow and cash flow analysis? Cash flow is the net cash and cash equivalents transferred in and out of a company. Sometimes it will be a net cash because sometimes the cash will be in. This is the cash inflow, and sometimes the cash out flow. So net cash is the difference between the cash inflow and outflow. Or sometimes equivalent of cash that will be transferred into the company or out of the company. Cash received represents inflows, while money spent represents outflows. A company creates value for shareholders through its ability to generate positive cash flows and maximize long-term free cash flow, FCF. Uh, FCF is the cash from normal business operation after subtracting any money spent on capital expenditures. Okay. What is the cash flow analysis? Cash flow analysis means analyzing or checking the different streams of cash flows. There are three cash flow analysis. One is for the cash flow from the operating of your business. Second one, investing of your business, and also the financial activities of your business. Three. One is operating activities. Second is the investing activities. Third is the financing activities. So for an entity during the accounting period, maybe in the financial year of 2015, 25 to 26, this accounting period and understanding the movement of cash from one stream to another and reconciling the net movement with an opening as well as the closing amount of cash balance of the entity. Obviously, we have to understand the opening cash and also the closing cash. These two cash value very important. It is the examination of the cash inflows and outflows of a business to determine a company's working capital. It also represents the company's working capital. It is calculated by subtracting current liabilities from the current assets. There are two another different important words you can see. One is the current assets, which is revenue, which is the profit. Another is the liabilities, this is the cost. So if you subtract the liabilities from the assets, then it will represent the net cash flow during a specific accounting period. It provides a comprehensive view of how cash moves through a business, highlighting the sources and uses of cash and offering valuable insights into its liquidity. Here around a business cash flows, you can see inflow, cash paid by the customers that will come to your company. So here you can see the stocks ordered from supplier, production turns stocks into products, then stock held until a customer is found, products sold to the customer, customers pay for their purchases. So this is the cash flow cycles, and the money coming from the customer to the cycle, this is the cash inflow, and the money which is spent by yourself to the other people, this is the cash outflow, cash paid to the suppliers and employees. So this is the cash flow cycles. Now, cash flow statement importance. What is the importance of the cash flow statement? If you see there are different planning, short-term planning, here the long-term planning also. So at first we have to do the short-term planning, and then we have to provide the details where the money is spent. After then creating the excess cash, then revealing the cash planning results, then long-term planning. After that, knowing the optimum level of cash balance helps in analyzing the working capital. So the cash flow analysis holds the following immense significance for businesses. One is the informed decision making. This analysis of the cash flow will help you to do some decision making. enables insightful decisions on investments, expenses, and growth opportunities. Then long-term planning, it anticipates cash requirements and ensures adequate liquidity for obligations and operations. Operational optimization, it identifies areas for improvement in cash management, expense reductions, and supplier relationships. Working capital management assesses the availability of funds for daily operations and financial obligations. Financial viability determines the ability to pay bills, cover expenses, and mitigate potential bankruptcy or financial distresses. So it will help you to understand to ensure the financial viability. So these all five important factors that can be explained by the cash flow analysis, cash flow statement. So cash flow ratios, cash flow margin ratio one, cash flow coverage ratio. There are two equations. What is the definition of cash flow margin ratio? Cash flow margin ratio is a ratio of cash flow from operating activities divided by revenue. Revenue means the income. So cash flow margin ratio is the ratio of cash flow from operating activities divided by revenue. On the other hand, cash flow coverage ratio equal to cash flow from the operating activities divided by debt. Okay, this is the debt. One is the revenue, another one is the debt. So these two ratio we have to understand for analyzing the mathematical and also the financial statement. Let's talk about the advantages and disadvantages of cash flow analysis. Advantages mainly, it helps to understand the cash movement due to cash stream. Cash budgets can be prepared using cash flow statements, which gives guidance for working capital management. The company can set target cash reserves after analyzing the cash flows, and also can manage when to take to a new loan, pay the existing loan, and manage its credit profile. It also helps to understand when to stop paying the vendors so that you do not run out of cash in the near future. Okay, cash flow will help you to decide whether you will pay for the vendors in your company that the company will not run in the future. So if you see that your company will not run in the future time, then you can talk with the vendor and you can stop paying the vendors. Cash flows help to keep sufficient funds at the disposal to meet emergency production requirements. It can sustain the time production of units and timely supply of the finished products. These all are the advantages of the cash flow analysis. Disadvantages, the growth percentage or trends cannot be predicted when an income statement is done using the cash flow parameters. So the overall growth of the company cannot be predicted every time. Okay. Number two, cash flows cannot give the insights about future streams due to uncertainty. If you do the cash flow analysis of your company, is okay, but it will not definitely tell you about the future streams due to the uncertainty. Uncertainty, it will not come easily. It will come anytime. It may be happen. This is disadvantages. Analyzing the cash flow streams is easy only for persons with a little finance background. Cash flow analysis stream is very easy for the little background, but for the potential investors, the company needs to explain them. Thus, analyzing part is not that easy for everyone on the floor. So if it is a conglomerate and also not a very small company, it will little difficult. Fourth one, cash flow is concerned with cash movements, and thus it is based on a cash system of accounting. Thus, one may get confused with the method of accounting followed. Number five, the profitability of the company cannot be analyzed using the cash flows. Deducting profits and adding back losses may create doubt in the minds of some people with a lower finance background. So you cannot see that your all employee will be able to handle the cash flow analysis. Someone will not be able to handle, but the expert people can handle. So that's why there will be a little disadvantages. Sixth number is organization's cash flow is not mandatory yearly, unlike the income statement and balance sheet. But if you have a company, you must complete your income statement yearly and balance sheet. But it is not mandatory that you can do your cash flow analysis. That's a little disadvantages. Okay. Now the components of the cash flow analysis, there are basically three components. One is the cash flow from operations. Cash flow considering the operation of your company. Operational matters will be there, and the cash deals with that operational activities is the cash flow from operations. Number two, cash flow from investing. Sometimes operation means what? Operation means the capital, loan, and also some other very important things. Revenue, okay, and the expenses. These all are the operation. Interest, tax, dividend. These all are the operation. Investing means that you have to invest something that is needed for starting your company. It means the machineries, infrastructure, building, land. This is the cash flow you have to pay or you have to handle. Third one is the cash flow from financing. That is the share, borrowings. These all are the cash flow from financing. So let's see the table at a glance. Cash flow from operation, if you see here, expected inflow, what will be? Sales revenue. If you have a sales revenue, it will be the cash inflow. Very important. Inflow, and which is the operation. Interest receipt. The money will come to your pocket. That's a expected inflow for the operation. This is interest. Dividend receipt. Interest, dividend, these all are the inflow for operations. On the other hand, outflow, the money which is coming out, which is going out from your pocket, is the outflow. Operating expenses. Operating expenses, you have to pay the money to your employees. That's the operating expenses. Interest paid. Here, interest received. Very carefully mind it. Interest received is the cash inflow. Interest paid, the money will be out from your market due to the interest payment. So this is the outflow. Income, taxes paid. The money you have to pay to the government. This is the income tax paid. The money will be out from your market. So what are the inflow due to the operation? You can see again, sales revenue, interest received, dividend received. These all are the receiving money will be stored in your pocket. That's the inflow. And these all are the money out from your pocket. That's the outflow. What is this? For the operation. Operating expenses, interest paid, income tax paid. Second one is the cash flow from investing. And here, sale of long-term assets. If you sell your long-term building, machineries, land, okay, furniture, these all are the inflow. After selling those kind of assets, you will get the money. That's why this is the inflow due to the investing. What will be the outflow? Purchase of long-term assets. Say, for example, you are purchasing the furniture, you are purchasing the building, you are purchasing the land, you are purchasing the machineries. So you have to pay for that. The money will be out from your pocket. That's why purchase of the long-term assets are the outflow due to the investing. Third one is the cash flow from financing. Here you can see the issuing of shares. If you issue some shares, people will buy the share, you can get the money. Okay, issuing of shares, inflow. Borrowing some money, you are borrowing some money from your friend, so that the money just will be stored in your pocket. That's why This is inflow due to the financing, matter of finance. No furniture, no machineries, no land. This is the for financing. And what will be the outflow? You can see dividend payments. Dividend payments, this is the due to the financing. Loan repayments, that you took the loans, now you are repaying these loans, the money will be out from your pocket. So dividend payments, loan repayments, these are the cash outflow from financing. Okay. So there are three major cash flow component. One is cash flow from operation. Number two, cash flow from investing. Number three, cash flow from financing. So there will be another two major criteria. One is the expected inflow for expected outflow. So now let's talk about the characteristics of the cash flow from operation. It focuses on the cash generated or used the company's day-to-day operations. This is the characteristics. It includes the sales revenue and the interest received, dividend received, operating expenses, interest paid, income tax paid. So changes in working capital, non-cash item like depreciation, amortizations. Okay. This includes the cash flow from operation. But if you see here, this is inflow, this is outflow. It reveals the cash flow directly associated with the core business operation. This is very important for the core business operation. And next, what are the characteristics of cash flow from investing? And it examines the cash flow resulting from purchasing or selling long-term assets such as property, equipment, investments, land, houses. Okay. It provides insight into how investment decisions impact the company's cash position. It assesses the effectiveness of capital allocation and potential return generated from investments. And third one is the cash flow from financing characteristics. You can see it analyzes the cash flows resulting from activities relating to financing. It includes the issuing or repurchasing shares, okay, and obtaining or repaying loans, either loan repayments or obtaining the loans, means the borrowing some loans or paying dividends. You can see the dividend payments. Assesses the impact of financing decisions on the company's cash flow and capital structure. So these all are the components of cash flow analysis. Let's talk about the more details. You can see cash flow analysis is divided into three parts that I said in previous slide. Cash flow from operation. Here, cash flow from operation, cash inflows, generation of funds in normal operation, cash outflows, expenditure of funds in normal operation. That's the operation. Number two is the cash flow from investing, cash inflows, sales of plants, equipments, liquidation of long-term investments, cash outflows, purchase of plants and equipments, investments in long-term investments. Plus cash flow from financing, cash inflows, debt issuance, common stock, prepared stock, and other securities. Cash outflows, retirement of debt, common stock and prepared stock, payment of cash dividend. So if you see here, the CFF is the cash flow from finance. Here the cash flow from finance equal to CED. CED is cash inflows from issuing equity or debt. CED equal minus CD plus RP. CD is the cash paid as dividends. RP is the purchase of debt and equity. So this is the again another talk about the components. Now let's talk some. There are 5 major steps to look out for trends and outlines that can tell you a lot about the health of the business. You can see aim for positive cash flow. That you have an aim for positive cash flow. When it is happened? When operating income exceeds net income. Net income is, say, for example, $100. Your operating income is $200. So means that you are just far away, is the top. Okay. So it's a strong indicator of a company's ability to remain solvent and sustainably grow its operation. So when the company will be treated as the aim for positive cash flow, obviously the operating income exceeds the net income. Number two, be circumspect about positive cash flow. This criteria will tell you, on the other hand, positive invest in cash flow, positive, and negative operating cash flow. They are one positive invest in cash flow, another one negative operating cash flow. One is investing, another one is operating. There are two terms. Just look at the things actually. Positive investing cash flow and negative operating cash flow could signal problems. So investment cash flow is positive, but operating cash flow is negative means what? You have a very big machineries, you have a lot of land, you have a lot of wealth, but you have a more money, you are taking more money to run your business in terms of the employees' salary. If it is happen, it would cause a signal problem. For example, it could indicate a company is selling of assets to pay its operating expenses. So, as the investing cash flow is higher, positive, and the operating cash flow that you don't have any money in your pocket to operate your company, obviously you have to go to sell the assets, to sell the equipment, to sell the land, to sell the building, furniture, to pay his operating expenses, which is not always sustainable. It's a dangerous. It's a risk. So number one is very good. Number two is the little problem. Okay. Number three, analyze your negative cash flows. When it comes to investing cash flow analysis, negative cash flow is not necessarily a bad thing. It could mean the business is making investments in property and equipment to make more products, a positive operating cash flow, and negative investing cash flow, or the opposite. Okay, opposite of two. So operating cash flow is now positive, and investing cash flow is negative. Could mean the company is making money and spending it to grow. Okay, the company, to run the company is okay, but for a long term, your equipment, your property will be in a danger. So for a short time, maybe it's okay. So positive operating cash flow and negative investing cash flow could mean the company is making money and spending it to grow. Number four, calculate your free cash flow. What you have left after you pay for operating expenditures and capital expenditures is free cash flow. This can be used to pay down principal, interest, buy back stock, or acquire another company. Operating cash flow margin builds trust. The operating cash flow margin ratio measures cash from operating activities as a percentage of sales revenue in a given period. A positive margin indicates profitability, efficiency, and earnings quality. So this is the indicator that your company will run in a good way or not good way. Let's talk about the preparation of a cash flow statement. How will you make a cash flow statement for your company? Let's first look at preparing the operating cash flow statement. First of all, the criteria is operating cash flow. The line items that are factored into the company's net income and are included on the company's operating cash flow statement include but not limited to. Okay. The item is cash received from a sales of a goods or services. This is the first cash. Number two, purchase of inventory or supplies. You can purchase your inventory or you can purchase your some goods. Employees' wages and cash bonuses. You have to give some wages and bonuses to the employees. Sometimes you have to pay to the contractors. vendors. Sometimes you have to pay the utility bills, rent or lease payments, interest paid on loans and other long-term debt, and interest received on loans, fines or cash settlements from lawsuits. Okay. Maybe you lose the law, then you have to fine, or sometimes you win the law that you can get some cash, and these two things you have to settle. So these are the item maybe you have to consider in a mathematical problem. There are two common methods used to calculate and prepare the operating activities section of cash flow statement. One is the direct method, another is the indirect method. The cash flow statement direct method takes all cash collections from operating activities. At first, you have to collect all the cash collection, means the inflow from the operating activities at the time of the operation of your business. And then you have to also calculate the other cash outflow, okay? The cash disbursements from the operating activities. Then there are two activities. One is the cash collection, another is the cash disbursement. So these two things, if you subtract, then you'll get the net income, okay? And this is what the direct method tells. Another one is the cash flow statement in direct method starts with the net income. And this net income you have to add or subtract from the amount for non-cash revenue or expenses items. Okay. When you complete the operating cash flow statement, then go to the cash flow statement is investing cash flow. That bottom line is calculated by adding the money received from the sale of assets, paying back loans and selling stock, and subtracting money spent to buy assets, stock or loans outstanding. Finally, financing cash flow is the money moving between a company and its owners, investors, and creators and creditors. Okay, this is the general guideline to prepare a cash flow statement. First, this one is the talking about the cash flow statement from operating activities. This one for the cash flow statement for the investing activities. Finally, cash flow statement for financial activities. Now, problem, okay? One problem, mathematical problem, cash flow analysis example. And problem is from the summarized cash book of Zenith Limited, shown below. This is the, you can see particulars, total money. This is the credit below. This is the debit below, okay? This is the credit below. This is the debit below for a Zenith Limited company. You have to calculate the net cash flow from operating activities. There are a lot of activities you can see, okay? And from there, we have to calculate only the activities relating to the operating cost, operation, okay? First of all, what is the given here? What is given here? Particulars. So to balance B by D, some new term you have to understand here. Balance B by D means what? Just try to understand. B by D means balance B by D is the balance brought down. BD means brought down. Very carefully minded. BD brought down as opening balance of a ledger pulled from previous accounting period. If you have any idea about the commercial activities in your practical life, you will understand that what was the rest money of the previous year, this money will come to that year as the opening balance, okay? And this is the balance brought down from the previous year, and which is the 150,000 US dollar. This is the opening money you are getting from the previous accounting year, okay? That's why you have to put it in the top. And okay, and to sell the machinery, if you sell the machinery, you'll get the money. If you receive from the debtors, also this is the cash inflow. To issue of shares, if you issue of share, people will buy this share and you will get the money. So this all money are the credits, means the cash inflow, and which will come to your pocket. 13,500, okay, 135,000,000 US dollar. This is the credit below. This is the Profit value, this is the revenue, and this is the positive value, cash inflow. What about the cash outflow? Please look at the table in the right side. By repayment of bank loan. Okay, if you pay the bank loan, the money will be out from your pocket. That's why this is the debit value, 450,000 US dollar. By purchase of machinery, if you purchase machinery, then you have to pay this money. This is the debit. By payment to the creditors, if you pay this money to the creditor, then this money also will go out from your pocket, debit value. By dividends, okay, by dividends, this is also the cash outflow. By wages and salaries, you just pay the dividends, you just pay the wages and salaries to the employees, you just pay the rents, rates, and taxes, you just pay the income tax, and these all below are the debit value. Okay, debit value. But the last value is by balance CD. You have to understand this value. This value will not be given in the statement, but you have to put it here. To make these two value equal, you have to put this value as a supplementary value. So the balance CD means balance CD is the balance carried down. CD is the carried down. Okay, carefully mind it. Carried down. So in order to make these two statements equal, this is the balance sheet. This value and that value must be equal. But if you add this value, that value, that value, that value, that value, that value, that value, it will not be that value. But you have to put it here to make it balance, equal balance. That's where the money which will be put in the balance sheet to make the credit value and debit value equal. This is the balance CD. Balance CD means the amount of balance that carried down to the next financial year. Okay. This value will go to the next financial year, same as the balance BD coming from the previous financial year. Okay. If debit side, this is the debit side, this is the credit side. If debit side is higher than the credit side, cash outflow, net cash outflow negative. If the credit side is greater than the debit side, it will be credit balance. Okay. If this value is greater than that value, sometime or somehow this is the debit value because it is a debit particle, it is the credit particles. Okay. I think you understand this problem. So now we have to calculate and we have to prepare a cash flow analysis from operating activities. These all the parameter are not belongs to the operating activities. Sometimes it is some machinery is the investment activities, share is the financial activities, machinery is the other activities, salary is the operating activities. So please see the in the right side is the solution. This is the solution table. So cash received from debtors is this one. To receives from the debtors, this is the amount of cash coming from the other people to your pocket. This is the due to the operating activities. So this is the plus value. So cash received from debtors is this value is the positive value. And other cash receipt, no other cash receipt. So this is the total cash inflow for the financial activities. Machinery will not come here because machinery is the investing activities. Share will not come here because share is for the financial activities. But we have asked to calculate only the cash flow from operating. Only one will come here. This is the receipt from debtors, 9,000. As it is a credit value, it will go to the credit side. This is the credit side. Okay. Credit side. So this is plus same value. But what about the other debit side for the operating activities? Okay. And you can see the bank loan, payment of bank loan is the financial activities, not the operating activities. Purchase the machinery is the investing activities, no, not the operating activities. But payment to the creditors, this is the cash outflow for operating activities. That's why you can see less cash paid to the creditors. Payment to the creditors or paid to the creditors is the 780030, this one. Okay. This is the outflow. Okay. Another one is the buy dividend. Buy dividend is not come here. It is the financial wages and salaries. This one is the operating. It will be happen due to the operation. That's why payment cash paid to the employees in a forms of wages and salaries. This is the 600,000. And another one, this is also the cash outflow due to the operation. This one here come. Okay. And another one is cash generated from operation. And here the okay. Now you can see the this below, that below, that below. If you add this outflow or debit below is the 870000, and here you can tell that this is inflow, this is outflow. Inflow is greater than the outflow. So inflow minus outflow is the net cash generated from the operation, net bill. This below minus this below. Subtraction from this below from that below. This is the 300,000. But if you see here, the below, the two balance BD below. Okay. Income tax. Yeah, yes. This one is the income tax is also paid here. Income tax. This income tax below will not come in your statement because it is just paid. So less income tax below is that you can see 150,000. 150,000. So net below minus income tax below. This is 300,000 minus 150,000 equal to 150,000 net cash flow from operating activities. So this is all about the solution table. This is the problem table. I will give you the problem table in the classes. Then you have to understand which parameter is for the net cash flow from operating, which parameter from investment, which parameter from the financial activities. So this is for the Zenith Limited calculation of net cash flow from operating activities, direct method. Why it is direct method? Because credit below in one side, debit below in another side. So credit minus debit is the net below, and from that net below we have to subtract the income tax. So this is the total net cash flow from operating. This is the answer. Okay.
স্যার একটা কোশ্চেন ছিল
হ্যাঁ বলো।
স্যার ব্যাংক লোন আর মেশিনারিটাই কনসিডার করি নাই কেন?
হ্যাঁ, ব্যাংক লোনটা আমি যদি বলি ব্যাংক লোনটা কই, আর মেশিনারি না, মেশিনারি তো তোমার অপারেটিং না। আমি তো বলেছি, দেখো এই যে এখানে বলেছি, প্লিজ লুক এট দা বোর্ড এগেইন। এই দেখো মেশিনারি কিন্তু আমার কোন জায়গায় আছে, এই যে ইনভেস্টের মধ্যে মেশিনারিজ, কিন্তু এই যে মেশিনারি গুলো ইনভেস্টের মধ্যে লং টার্ম, কিন্তু এটা হচ্ছে ইনভেস্টমেন্ট রিলেটেড, যেমন প্রপার্টি, ইকুইপমেন্ট এবং মেশিনারিজ, ল্যান্ড, এগুলো সবগুলো হচ্ছে ইনভেস্টমেন্ট, ওগুলো অপারেশন না। অপারেশনের জন্য the parameter will be needed for operation. These all will come for the cash flow from operation. একটা আপনার সাথে মিলানো যাবে না কিন্তু। যেগুলো লং টার্ম অ্যাসেট আছে, যেমন মেশিনারি আছে, ল্যান্ড আছে, দেন সয়েল আছে, ইকুইপমেন্ট আছে, ফার্নিচার আছে, এগুলো তো লং টার্ম অ্যাসেটস। This is only for investment, very important. But operating, this one we have to understand these 6 terms: sales revenue, interest received, dividend receipt. The money will come to your pocket. That's the inflow. And এটা হচ্ছে credit value কিন্তু left side থাকবে, and these all are the debit value that will be the right side. Operating expenses, এক্ষেত্রে মানি চলে যাবে পকেট থেকে। Interest paid, money will go out from your pocket. Income tax paid. তাহলে আমরা cash flow from operation এর the example is this one, the Zenith. Only the cash flow operating parameter we have to select. Not the machinery, not the share, not the other machineries, not the bank loan. Okay. This one, এটা আমরা এই যে ব্যাংক লোনটা এখানে বলছে, দেখো এই যে লোন রিপেমেন্ট, দেখছো লোন রিপেমেন্ট হচ্ছে এটা ব্যাংক, এটা হচ্ছে ফিনান্সিয়াল অ্যাক্টিভিটিস, নট অপারেশনাল অ্যাক্টিভিটিস। ওকে, দ্যাটস এ ব্যাংক লোন উইল নট কাম, bank loan will not come. Machinery, bank loan is for the financial activities. Machinery is for the investment activities. Careful. Okay. Now I am going to the another example. This is for the investing activities. এখন তুমি কোয়েশ্চনটা করতে পারো আমরা তাহলে ইনভেস্টিং অ্যাক্টিভিটিস কোনগুলো নেব? যেমন দেখো ফার্নিচার ইজ দ্য লং টার্ম অ্যাসেটস, এটা ইনভেস্টিং অ্যাক্টিভিটিস। মেশিনারি ইনভেস্টিং অ্যাক্টিভিটিস, বিল্ডিং ও ইনভেস্টিং অ্যাক্টিভিটিস, ল্যান্ডও কিন্তু ইনভেস্টিং অ্যাক্টিভিটিস, লং টার্ম অ্যাক্টিভিটিস। ইনভেস্টমেন্ট লং টার্ম, দিস ইজ অলসো দ্য ইনভেস্টমেন্ট অ্যাক্টিভিটিস। এখানে কোনো there will be no dividend, no wages, no salary, no loan payment, no interest paid. এই ইনভেস্টিং অ্যাক্টিভিটিসে এরকম থাকবে না, নো। ওকে, this problem table is given for the cash flow analysis from investing activities. I will request you to carefully listen because the problem is very easy, but if you don't understand, maybe it will be very difficult to calculate, to solve in the exam. Okay. There are some additional information is given as follows. Okay, let's understand. Let's see the table. This is the particular. This is the two financial year. One is the 2018 to 2019 in terms of dollar. Another one is the just next year, the 2019 to 2020. Two consecutive financial years values are given. Furniture. Please look at the table. Furniture. The value of furniture in that financial year, it was this one, and the next year it was that. Machinery just increased. Building value decreased because depreciation is there. Building will be depreciated. এটা ক্ষয় হবে, depreciated হবে. The original value will not be sustained for the next year. Land at cost. Land cost land value এখানে কমছে, হয়তো কোনো কারণে কমছে। ল্যান্ড এটা হয়তো ল্যান্ডফিল্ড বা এনি আদার রিজনে ল্যান্ড ভ্যালু জাস্ট রিডিউসড, is given in the exam, in the question table. Interest investment long term investment in that year 90,000, here there 210,000. Okay, this is the table given as a problem, but additional information is given as follows. Depreciation charged on furniture during the year was 10,000. So furniture depreciation, the furniture will not be same as the previous year in the current year. So we have to add the some depreciated value. Depreciation on machinery charged during the year 25,000. Here also some depreciated value. Machinery, the book value of which was 80,000, sold at 75,000. The machinery which was the initial value was 80,000. Due to the depreciation, its value decreased from 80 to the 75,000. Land was sold at a profit of 90,000. Land was sold at a profit. Though these information are given as additional information with this problem table. Okay, this is the solution table. Solution table, just you have to go to the next working table. Otherwise, you will understand working notes. At first, you have to do working notes, then you will come to the solution table because there is some little sub calculation. You will not get easily direct calculation. Okay. So let's talk about the working notes for the furniture. This table is for the furniture. This is the credit value, this is the debit value. Carefully mind it. Left side is the credit value, right side is the debit value. Let's talk about the furniture value in the previous financial year to balance BD that aside previously. Brought down the balance, the amount brought down from the previous year, which is the 100,000. You can see the 100,000. 18-19 সালে it was the 100,000. এই জন্য এটা যেহেতু আমরা 19-20 হিসাব করতেছি, সুতরাং এটা ক্রেডিট ভ্যালুটা আমরা আমাদের 100,000 চলে আসবে বি বাই ডি দিয়ে। ওকে, বি বাই ডি দিয়ে চলে আসবে। ওকে, এখন okay, now let's talk about the depreciation on furniture. Very carefully mind it. Depreciation charged on the furniture during the year 10,000. So this is the by depreciation. Depreciation means we have to surrender this amount. The amount will be out from the market. So paid as a depreciation, this is the 10,000. This is the debit bill. Okay. Debit bill. Now, please go to the previous table. Here the buy balance CD 120,000. This is the buy balance CD 120,000. So this 10, 120, total is 130. Okay. Clearly, you have to write the similar below in the credit table as a final value. So if it is a 130, this value also 130 as a role for financial statement. এটাই আমাদের ব্যালেন্স শিটের কিন্তু নিয়ম। টোটাল ক্রেডিট ভ্যালু উইল বি ইকুয়াল টু টোটাল ডেবিট ভ্যালু। তাহলে আমরা এই দুটো যোগ করে উই আর গেটিং 130। So এখানেও we have to write the 130, but mind it, the balance BD was 100,000. So this value minus that value, the remaining value. Remaining value, we have to put it here, which is the to bank balance figure. This value is given to make the balance. Okay. This coming from the purchase of furniture. So this is 30,000. So this 30,000 and 100, it will be 130. This 10 and 120 is the 130. So let's go to the main table, solution table here. You can see purchase of furniture is 30,000. You can see the purchase of furniture. Purchase of furniture is 30. So here, so cash payment, purchase of furniture is 30. And let's go for the machinery now. This is the furniture table. This is the working notes, the supplementary notes. And this is for the machinery. So first of all, please put the value to balance BD by balance CD from here. CD and BD. This is BD, this is CD. Write down clearly now. BD value, CD value. Okay. Now, please look at the depreciation on machinery is the 25,000. Put it here, 25,000. And another important factor is written here. The machinery, the book value, which was sold at 75,000. Okay, 75,000. And by bank, sale of machinery is the 75,000. And what is the loss? 80,000 minus 75,000 is a 5,000. And then this total value is 1,905. And you have to put it here and then subtraction from here to here, and then you will get the 405 machinery. So this machinery value you have to put it here. 405 is here. First one is the furniture 30. Second one is the machinery 405. Okay. And this is for the building. This is for the land. Okay. Similarly, that's the precision added. And then you'll see here the okay, and here 20,000. And again for the land, you'll see the BD value, CD value. And here the sale of bank. Okay, and here the 2019 total value, and this total value is the 90. Now please come here. The cash received from the sale of land. You can see the sale of land is here. Sale of land is here, 290. And you can see here land was sold at 90. Okay, land was sold as 90. 90 plus 100, 1,080. So this one. And that one you can read 290. And so 290 is the cash inflow. Sale of machinery is 75. You can see. Yeah, sale of machinery is 75. You can see. So total is cash inflow is this one, 365,000. And here the cash outflow is 555. So inflow minus outflow is the negative below. That's why it is bracket, negative value. So net cash flows from invested activities indicates $190,000 indicates cash outflows are more than the inflows. Okay. So this is inflow, this is outflow. That's why এখানেও আমরা inflow থেকে outflow minus করে then we are getting the negative value. A negative value টাকে financial statement you have to put it in bracket. And last one is the cash flow from financial activities. Very simple. If you want to do it, at first you have to go to the this table. What are the financial activities? What will the financial inflows is the issue in shares, borrowings, loan borrowings. Outflow will be the dividend payments and loan repayments. Okay, dividend and loan. Okay, payment. Payment, when you do payment, then the money will be go out. That's these two parameters for the outflow. And issue sharing and borrowing are the cash inflow. And now go to the table, last table here. Problem is, from the following information acquired from the Tarapur Limited, calculate net cash flow analysis from financial activities for the year 2019-20. Okay. Particulars, equity share capital of the face value 100. Each and every share value is 100. And capital value is this one, this 1,000, and this is 1,000, 1,000 and 1,200. This one. Share premium is this one, 100 to 140. Okay. 10% debentures, 600K to 400K. 8% long-term bank loan. This is also the all our financial activities. 400K to the 600K. Okay. Interest on debentures paid during the year was 30,000. And on bank loan, 40,000. Interest paid. That I said to you, please look at the table again to memorize, to understand. So interest paid. Okay, interest paid, dividend paid and loan repaid, and loan paid as like as the interest paid. Okay, interest on debentures, interest on debentures. Okay, this is the debentures you can see here, not direct interest. Okay, this is the payment. Okay, payment for the debenture. Debenture is the financial, not operating. Okay. So let's see, first of all, the cash receipt is the cash inflow. These all are the cash payment, means cash outflow. First of all, issues of share. How much share value that issues here? 1,200 to 1,000 minus, then it will be 200K. Just subtract. This is the, if you issue this share, you will get this money. Okay, this money, this is the inflow or positive value coming to the pocket. And then another one is the share premium. Share premium similar as the share. Here is the share capital, here is the share premium. Both are the share. If you give this share, you are getting this money. So that's initially it was 100K. Now it is 140K. So the difference is 40K. Also positive value. Final money is initial value. Okay. And the long term, if you see here, long term, the difference is 600K minus 400K. It is 200K. Then these all are the inflow value. So coming from you to your pocket. So this value, that value, that value, if you add, then it will be 440K inflow. Okay. And what about the outflow? Payment of interest on debentures. This given here 30,000. And payment of interest on bank loans. Bank loans payment is given 40,000. Okay. Another one, these the 10% debentures. This is the redemptions of debentures. You can see here is decreased 600 minus 400. So it is 200. It decreased, means that the money is going out from your market, from your pocket, from your company. So this below, that below, that below, you have to sum up, then you will get into 270K. It is 440K inflow. My outflow is 270K. So that difference is the net cash flow from financial activities. So this is 170K dollar. this all about the three very important example of the cash flow analysis coming from the operation. Number one, number two is the investment, number three is the financial activities. I have given the slides to you. Please try to understand. If you don't understand, maybe in the next class when I will take it physically, maybe I will clear you. And it's very important that you have to practice by your own hand so that you can do well in your final exam. Okay. Is there any question? Maybe I will take the question.